Hello, this is Brian Shannon from Alpha Trends Blogspot. Today is Friday, the 28th of December, 2007, and the markets closed for the day and the week, and we had a small loss here for the S&P 500. They were down about a nickel here, and you can see that the right candle indicates that the close was lower than where they opened, so intraday we did have a little bit of selling. And when we look at the 1 minute time frame, you can see that initially it started out a little strong, but then sellers came in pretty quickly here and aggressively with some large volume before the 10 o'clock hour. Market kind of turned sideways from there and really didn't accomplish a whole much after that. You can see closing right near that daily VWAP. As far as the 10 minute time frame, here we can see that the trend has been lower the last couple days with these lower highs and lower lows. That opening gap probably sucked in a little bit of long side pressure, but the market needs to stabilize. When you have all these moving averages giving you mixed time frames, mixed signals, it means that you've got to slow down and not really trust those openings. But we have a market that is still under a little bit of distribution here the last 2 days. You can see that it did take out this low right here, where we're looking for some support at 147.20. But as I was saying yesterday, the more important level of potential support was going to come at this prior resistance level at 147 even, and you can see it pretty much nailed it right there. And if we take a look at the Fibonacci from this most recent rally, we can see that that's also the 50% retracement of the move that occurred after the lows on the 18th and the highs that we had just seen on the 26th. So the market has retraced 50% of that, and now we'll look for a little bit of stabilization now that it looks like this prior resistance has in fact acted as support in here. It doesn't mean buy yet, but look for signal that look for not a signal but indications that the buyers are regaining control. And when you look at the daily time frame, again, it's potentially setting up this inverted head and shoulders pattern on the bigger picture. It's going to have to make a move at least. The good thing about the failure to take out this high here is that we can now get a higher high if the market takes out the 150 level. And 150 level is a psychologically important number, I think. It's where we've fought a pretty good battle for much of the second half of the year at that 150 level. So the market rallied up to that level. Now if it can take 158 out and then maybe blast through this downward trending line that connects these lower highs, then perhaps we can see more sustainable upside. And don't get sucked into thinking that a lot of times early New Year moves fail quickly as excited money comes to the market and says this is the year that the market's going to do whatever. And a lot of people might have expected, last year, a 5% gain for the S&P 500. What they wouldn't tell you is all these tremendous rallies and sell-offs that we've had in between. It's made it really a much better traders environment than we've seen in many years, because there's an opportunity for longs and shorts to make money in this environment, and that's not going to change very quickly until we can get back above that 152.5 level. I still think you've got to kind of pretty much overall be neutral on this market. Semiconductors, we're not even going to waste our time looking at today because they're pretty much dead. But the Russell 2000, we saw a real nice rally off that real important level of support near about $73 a share. The market rallied right up to the $80 level, where we also find that 200-day moving average in the approximate location, that is. But now it did close back below the declining 50-day moving average, so you still can't trust this market, and this level is just further it adds further significance to this level just based on the fact that we've had these recent tests of the level. Bullishly, you could say that we do have a higher low and we've got more repeated tests of this resistance, but overall we still remain in a very volatile environment where if the sellers take control on the weekly time frame, then things are going to be a lot more difficult going forward for the Russell 2000 investors next year. And so you've still got to just kind of take it slow in there on a case-by-case, stock-by-stock basis. If we look at the 10-minute time frame, You can see here that, again, the $80 level is going to be key as far as resistance goes. The 78.20 was the level that I thought, the market would have to get at least above this level to have any chance of having some further strength for this market in the near term. But instead we had lower highs and lower lows, and this market closed right near the lows of the day. So it was relatively weaker and lost about 1% today, 0.92%. So that's a little bit of reason for concern, just the fact that it is underperforming the S&P 500. If we look at the Fibonacci here, you can see that it's still not considered a reversal of this move yet. Typically the way that Fibonacci is interpreted is that if it pulls back more than the 2/3 or 61.8% retracement, then you can consider this a failed move in the overall neutral to downward trending environment here. So it remains real tricky, remains a volatile trader's environment. So you can look at it if you're an investor, I think is a exercise in frustration, but there's just some tremendous opportunities in these individual stocks today. Another solar stock, ASTI, just exploded here late in the day, up 6 points in the last hour, 45 minutes of the day. Just a huge rally, and there's going to be, I think this solar group, it continues to be an area where we want to focus attention. One stock that I think has the potential to really move in there still is this Hoku Scientific, HOKU. I do own just a small amount of the stock, but if you look at the weekly and monthly time frames, you can see if it gets past this stuff here, then it's at all-time highs. It's got a decent short position in it, and these guys actually manufacture the polysilicone, so they supply the companies with their polysilicone needs, which is in shortage. So that's a little bit more fundamental than I usually talk about, but basically keep an eye on this next week, in particular above about $12.30. Maybe we can pick off another stock like we saw in CSUN on Wednesday. As for the NASDAQ 100, the NASDAQ 100 continues to be really the strongest of these markets, just consolidating under this 5250 level. If the market can break above that 5250 level, I think you're going to see that a pretty decent little short squeeze may develop, and that could see new highs up here. So in the S&P 500, keep an eye on that inverted head and shoulders pattern. And someone asked me a question as far as, isn't it a reversal pattern, head and shoulders? And typically they're viewed as reversals, but I found them to be great continuation patterns as well. Forget about what they're supposed to do. Just look at, not about what they're supposed to do, but how they're categorized and that sort of thing. Because you have to trade what you see developing, and we've seen numerous, and even on these cues, we've seen numerous inverted head and shoulders patterns this year that have worked very well. This, back here we saw this inverted head and shoulders pattern on the S&P 500. We saw it right here. It didn't meet the target that we were expecting for this one, but that's again what stops are for. So back to the NASDAQ though, breaking above that 5250 could be a bullish development that allows this market to continue to move higher. As far as the weekly chart goes, it's still, this jury's kind of still out here, and I think that taking this level out could see a short squeeze develop, but we are, just getting more vulnerable. The more time it takes for a rally to unfold, the more suspicious you have to be that in fact it is coming. But it does build up the energy for a move, and basically, this market right now is range bound between 5250 and about 48.5. So breaking that range, I think, is going to lead to a pretty good move, and we'll probably, that'll occur in 2008, which is just a couple days away. So I will talk to you next week. Thank you.